Peter Dixon, global equities economist at Commerzbank, joins us now. Peter, I suppose 100,000, you're saying, well, you're a little bit ahead of everybody else, but I suppose when you compare this to a few months ago, you know, in February, March, April, when we were speaking about monthly gains of 200,000, that it's quite a drop.
Yeah, I mean, clearly the labour market has lost a lot of momentum in the course of this year, as indeed has the economy. We are seeing signs, I think, that the economy generally is beginning to gain a bit of momentum. Yesterday's productivity data were pretty decent, which is usually a sign that over the course of the coming months you can expect a bit more hiring. So, whilst the numbers at the moment look pretty modest, there are some positive signals on the horizon.
And Peter, as you say, the economic growth is gaining traction, isn't it? We had GDP coming in at 2.5% in the third quarter. So I'm just wondering, at what point does that start filtering through to employment?
Well, I think over the course of the coming months, we'll probably see the employment figures moving, broadly sideways, 100 plus or minus a little bit. So it's not a fantastic set of numbers, not a fantastic gain, I suppose you could say, in the jobs figures if we continue moving at these rates. Just some back-of-the-envelope calculations for you, though. I mean, you'd have to get something like 300,000 per month in order to get the unemployment rate down by about 1% before next year's presidential election. So I think we're going to fall well short of that kind of target.
So what are you expecting? Are you expecting unemployment to fall below 8% or to be around the 8% mark, say, at the beginning of next year? Where are we going to be?
I think we'll be very close to 9, to be quite honest, as we head into 2012. And we'll probably be around the 8.5 level, I would guess, sometime by the end of next year, because, let's face it, the US is not immune to the problems which are afflicting the rest of the world, and we're seeing, after all, quite a rapid slowdown in places like China. So, if they're feeling the pinch from the Eurozone crisis, you can bet that that's going to hamper the US as well.
And of course, a long-time issue has been, when we look at these unemployment numbers, it's the long-term unemployed that has been a particularly worrying trend. Is that something that is getting better or worse?
Can't see any indications it's going to get better at the moment. I mean, I think you really need to see the economy growing at well above average growth rates in order to get these people back into employment. In fact, what we're seeing at the moment is that a lot of people are simply becoming discouraged and they're leaving the labour force. So the true level of unemployment is actually higher than the figures that the BLS is putting out at the moment. So unfortunately, what's happening is a lot of the low-skilled who were thrown out of work during the recession are finding it very tough to get back in.
So what's next? I mean, do we need to see more stimulus? There are those, for example, Chicago Fed President Charles Evans saying that the Fed should keep easing monetary policy until we get unemployment down away from the 9% level, something closer to 7.5%. Is that something that's going to help? Do we need more stimulus?
Well, I think we're going to get more stimulus. I mean, whether it will help in the short term, I think, is debatable. Over the course of the next couple of years, hopefully we will start to see a more rapid turnaround. But unfortunately, when you get the kind of situation we're in now, which is effectively the recovery from a balance sheet recession, the only healing factor is time. And unfortunately, that may well be something which President Obama doesn't have an awful lot of right now.
Peter Dixon, global equities economist at Commerzbank, thanks very much indeed for joining us. Good to get your thoughts